Ladies and gentlemen, good day and welcome to Q1 FY25 results conference call of Senco Gold Limited, hosted by Emkay Global Financial Services. We have with us today Mr. Suvankar Sen, Managing Director and Chief Executive Officer, and Mr. Sanjay Banka, Chief Financial Officer. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Vishal Panjwani from Emkay Global Financial Services. Thank you, and over to you, sir.
Hi, good morning, everyone. I would like to welcome the management and thank them for this opportunity. I shall now hand over the call to Mr. Suvankar Sen for his opening remarks. Over to you, sir.
Hello, good morning, everyone. As we begin the day today, I would like to wish each and every one of you a very happy Independence Day in advance, as we will be celebrating it tomorrow. And we have, announced our Q1 performance. We had our board meeting 2 days back, and would like to take this opportunity to talk about it with all of you today. If we look at Q1, it's been a very exciting quarter, I must say. Especially as we have been discussing, last time as well, that we know it is a quarter of Akshaya Tritiya. We had our New Year's in many states, which as we begin the financial year, it is very important for us that we should start the year with a big bang and with a lot of excitement. So we had our launch of Bangle Festival and offers related to Akshaya Tritiya. And while this quarter was a quarter in which we had the elections that kind of in part of the country.
Sorry to interrupt, sir. Can you please go again? Your voice was breaking in between.
From where did the voice go a little?
After the Bengal season.
Okay. Thanks for letting me know. So after, Bangle Festival was on, we had our offers for Akshaya Tritiya. There were of New Year's happening at many states as we began the financial year. And while it was a quarter where we had our elections and the heat waves were impacting retail sales and footfalls at the stores in many places, we saw that during Akshaya Tritiya, our sales, those 41 days of sales that we had an increase of almost 20 to 21% in terms of sales value that it went up. And also, we must mention that this was a quarter in which the gold prices also were extremely volatile, and it had shown its upward trajectory moving upwards. So that also kind of impacted overall sentiments of the consumers. And therefore, in terms of the sales of volume that we got, the increase of sales in value terms was only 7.5%. And in terms of adding the new stores in that particular quarter, we added 6 stores, out of which 4 were company-owned, company-operated, and 2 were franchisees. So that was what it was. We have been planning and aiming to open about 18 to 20 stores for the whole financial year, and Q1 saw that we could open 6 stores out of the 18 to 20 stores, and out of that 1 store was in Dubai. So that was also a journey that we began to establish ourselves, our brand, with a global presence, reaching out to customers, not only from the Indian diaspora, but also Calcutta jewelry for its popularity and what it is famous for. The handcrafted product is appreciated by consumers of the Middle East, as well as there are consumers in Africa that appreciate Calcutta jewelry, and that is where we wanted to take it and use it as a beginning of a journey. and a platform to promote this handcrafted product to the other parts of the world. In terms of, if you look at the retail sales growth, we have seen a 9.6% retail sales growth. And the same store sales growth, if we look at it, it was about 4%. So in terms of top line, because of these multiple circumstances of elections and heat wave and the gold price movement, it was I would say a challenging quarter. But what went right was the fact that our ATV grew by almost 12% and our ASP grew by 13%. So in spite of the challenges that we have seen, our hedging also was much above 90%. So those kind of situations we try to mitigate the volatility. And even as the sales continue to happen, we build up stocks for the season. But post Akshaya Tritiya, the market became slower and slower. So we were focusing more on ensuring that we kept optimizing the stocks. I must mention here that while our endeavor always is to increase the diamond sales, and that would add to the margins, but this quarter one did not see that much growth in diamond sales. Rather, there was a degrowth in diamond sales by about 3 to 4%. So things were difficult, the sentiments of consumer, because when the prices rise, then the consumer, it has its impact on the gold component, the footfalls go down, and consumers want to procrastinate and postpone their buying purchases. In terms of the current situation, while the quarter one has now ended and we need to look forward and what we want to see ourselves as, the current recent situation of reduction of duty by almost 9% is a big boost to the industry. The way consumers were thinking that, oh, gold price is so high, it is not so good. And what we saw in quarter one was that it was the bigger ticket size items that were selling more, those who had to buy or related to weddings, that they were more keen to buy rather than the smaller ticket sizes. But I think this duty cut would make the demand for consumers across wedding and non-wedding category to come and buy the product. And we are already looking at it in a very positive way. The footfalls have increased. In the last, I would say, 15 days, the sales have gone up. And that is a very, very positive thing for the industry. In our quarter one, seeing the trend that, yes, we were seeing more of the wedding customers, though wedding season wasn't much there. We launched the Gadbandhan collection, which was all about the wedding jewelry, necklaces, bangles. And I think that those kind of, focused initiative to cater to the targeted customers who were in a mood to buy helped us and enabled us to achieve the sales and attract the consumers. But currently we are seeing that it is all kinds of customers, be it wedding or non-wedding, coming to the stores and buying, and products ranging from earrings in gold and diamonds, bangles, necklaces, all kinds of products are being sold. Yeah, what I have already discussed and been saying that yes, the cut on the duty would have an impact on the valuation of stock, because in spite of our hedging, how do we hedge? We hedge in two methods. One is hedging by selling on MCX on the sell side, or we take gold loan from the banks. Now the gold loan from the banks that are being taken, that is duty paid gold. So yes, the international price movements get hedged by the gold loan, but the duty cut movements for the gold that you have already taken on loan from the banks, that portion of it is not hedged. So for us, that portion that is already bought through gold loan, we are analyzing, and we are assuming that approximately 50 odd crores of financial impact would be there due to the duty that has already been paid and the market value that being coming down. But at the same time, I think that the positive of increase in sales, more footfalls, the ability to ensure that we will be able to achieve the numbers, the top line growth of 18 to 20% will be in pipeline. And in terms of how do we manage this particular sudden impact, While on the other side, what position we had taken on MCX, out there we have been able to protect ourselves and mitigate this duty cut impact and have been able to get the right kind of result. But here, through increase in diamond jewelry sales or ensuring that the discounting aspect of it that we have been seeing in the current market scenario, that players have been unnecessarily being aggressive in terms of their discounts and offers. And I think that mostly that would go with the fact that gold prices had moved so up. So they were all under the pressure of achieving their targets and growing. And as a result, I think that the offers and discounts were a little more than what it was required to be given. But nonetheless, I think that we need to all modify ourselves and ensure that this duty cut impact is rationalized through rational discounting and offers to the customers and other cost-cutting measures wherever we feel that we can control our cost. We would be doing that to ensure that we get minimum impact, and this impact of 50 crores would be, I think, spread over the coming 2 to 3 quarters. You will not be able to see the impact directly in one quarter because the inventory is there, and over a period of time we will be adjusting it. So this is what we feel. The wedding season is much in place. We had our exhibition, as in the jewelry exhibition, India International Jewelry Show, that happens annually during the month of August. And we could, I would be happy to tell you that there were a large number of footfalls, and there were manufacturers, wholesalers, retailers, big and small. And I think that they were all very excited. There were a lot of business that happened. So I think this duty cut that has been initiated by the government is a good signal and a good support to the industry in terms of the growth prospects. And with the wedding season coming in,
Sorry to interrupt again, sir. Your voice got big.
What was the last thing that you saw? I heard wedding season, festive season, preparing for Diwali, Dhanteras, and all the stores are being now, they are reaching out to customers, and all the necessary steps towards a successful festive season is what we are focusing upon. Now I would request Mr. Banka to further elucidate and take you through the numbers.
Yeah. Good morning, sir. So you've given a quite detailed update on everything. So 2-3 points I want to highlight. One is that despite the challenges of growth and the industry competitiveness, while we grew at 9% overall, but retail growth was 11%. And once again, this is the highest ever sale in this quarter. Similarly, we have maintained a good control on the OPEX. The gross margin have also been in a good range, primarily because what we see is that subsequent to the earlier quarters, like last year Q1 or 22-23 Q1, we've seen an improvement in the quality of our business. We have been constantly learning what is happening in the market and accordingly calibrating our marketing strategy, have kept a good control on our gold prices. So while in the market, we are recently talking about one India, one gold rate. At Senco, we are cognizant that a long-term sustainable business has to be based upon value proposition, and the value proposition cannot come simply by giving the price cuts. So that we have maintained. Similarly, when the gold price rises, making charges are usually as a percentage of sales. So in a rising gold price scenario, while in terms of percentage or gross margin, it can look same, but in absolute term, we usually get a higher gross margin. So that is one. Similarly, in our pricing strategy for our franchisee, we have made minor corrections. So all these changes in our business model have improved and calibrated our inventory valuation, and all this has led to improvement in the gross margin, which we are seeing. As you already said, hedging percentage has been, we said in the press release also, has been 96%. So which clearly means that we are not concerned about the price movement of gold. And even though we knew that the gold prices will rise, still we maintained above 80% and reached up to 96%, which led a loss on the hedging position. Because as a company, we are committed to the risk management strategy. So while there were realization gains on the gold, which was procured in quarter 3 and quarter 4, that was mitigated or negated by the hedging loss. And still we managed a good margin, EBITDA margin and a PAT margin. So with that, we hand over the call and the attendees, the respected investors can ask questions to us, and we'll be very much delighted to resolve to their queries.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. I remind you may press star and 1 to ask questions. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have our first question from the line of Shirish Pardesi from Centrum Broking. Please go ahead.
Hi, Shivankar, Bankaji, good morning. Thanks for the opportunity.
Good morning.
For good set of numbers. On slide 41, you mentioned that the revenue growth is 9% and SSG is 4%. Can you give some color how this SSG would have moved or revenue would have moved in April versus May and June?
So basically, in the first 41 days, the growth was 23% during the Akshaya Tritiya, and after and the prices were increasing. So it's not that the prices were not increasing in the first 41 days, but there was a momentum. The prices were despite increasing prices, we achieved a 23% growth rate. And suddenly, as 41 days passed, sometime around 16th or 17th of May, by that time elections were also at the peak, and then the market had taken a dip.
Right.
So SSG during that period was certainly more than 10 to 12%, as you said, that when the growth is 20%, SSG is usually 60 to 70% of total growth. But overall, in the next period, the market collapsed, and that's what you are seeing, a 4% SSG.
Correct. So basically, I think the right way to look at it is that in the first 1.5 months of the quarter, it was a good season. The pickup was there, but post the middle of May, things started moving downwards, and that is where the average out SSG was what we are seeing of 4%, 5%. So if that could be, we don't have the exact month-wise data, so we are just giving, but then the April and middle till Akshaya Tritiya, it was more positive, and post Akshaya Tritiya, it was more challenging. That's what we can tell you.
Thank you, Shivankar. Just follow up on that. So if that growth is 20% or SSG growth is 10%, I'm sure the average sales price or ATV would have been higher of 80,000-90,000, because your average is about 74,000.
Yes, it would. In the beginning of the quarter, the ATV ASP was on the higher side. That's what we were analyzing, and there is no qualms about disclosing those facts. That we could see that it was most of the wedding jewelry type of products and heavier products that were growing. The necklace segment was growing, but smaller ticket size ring, earrings, pendants, and all of those categories were not growing to that extent. The business was happening. Rather, they were 10% on the downward trend. So we were wondering that what is happening? Why is it that? So then we realized that those consumers with the disposable income and those with the need to buy jewelry for weddings or for their special occasions were still coming and buying. But those ones which with their limited savings and funds who had to buy were thinking that, okay, might as well wait for some time and buy it later. So I think that's the trend we saw in the Q1.
Okay. My second question is that when I look at store openings, 6 stores, and if I look at the depreciation and amortization expense, which has gone up by 44%. So what explains? Is there any one-off we have done, or there is some refurbishment of older stores which has happened?
No, I don't think so. I will get back to you. Basically, there is no one-off expenditure.
Okay.
There is no one-off expenditure. There is some basically 12 crore to 18 crore. So during the last year, we have set up around 24, 25 total stores, and around 15, 16 owned stores. So this impact may be due to that factor that we added so many stores, and particularly one large size store that we said is Hathi Bagan, which was under CWIP for more than 4 or 5 years. So that was capitalized sometime in June 23. This may be an impact due to one of the Hathi Bagan stores, but there is no great impact that we can assure you.
Okay. Bankaji, last question. Your studded has now reached 10%, which was about 10-11%, which has remained steady. So
Yeah.
Could you spell out what is the target or what is the inputs we are doing to improve the studded ratio? And maybe in Q1, what is the wedding part of the business contribution?
In Q1, the studded ratio, sir, came down. Last year, on an average, the studded ratio was about 11.5%.
Yeah.
But in Q1, the studded ratio was around 9.6, 9.7%. So there was a lower traction and sales of diamond jewelry during the Q1.
So going forward, as you said, we have maintained that this Q1 was an anomaly, and not only for us, for the entire market. So we have been building the inventory despite we know that there are challenges in the diamond sale. So we have built up the inventory, we have built up the war chest, and if you look at our total inventory of around 2,400 crore in the balance sheet, to be precise, 2,593. So around 450 to 500 crore is a diamond. So we are clearly working out on the strategy. So we said that at least 100 basis points the stud ratio will increase. So while it has become 10%, 9.5 in the current quarter, our target remains the same. It is only 1 or 2 quarters, as you said, do not decide the journey. The journey very clearly remains a confident journey, and more so since our diamond prices are quite attractive vis-a-vis the competition. We are sure that we will achieve the 12.5 to 13% this year. But surely we'll touch 12%.
Okay. And on wedding, what is the contribution?
Sir, wedding contribution, the definition of how do we define a wedding jewelry is very subjective, but we assume that any product that is related to weddings, whether the price is above 1 lakh or it is specifically like say Mantika or certain types of bangles that is wedding related, we kind of try to take it. So it's usually around 40 to 45% is what we assume the wedding jewelry share is.
Thank you, Shivakar, and all the best to you.
Thank you. Thank you.
Thank you. We have our next question from the line of Ayush from Shravas Capital. Please go ahead.
Yeah, I am audible.
Yes, you are.
Yes, sir. Good morning. I just had one simple question on the gold metal loan. So as far as my limited knowledge, I just wanted to understand how this is not being hedged, right? Because just to give you the gold metal loan is for 180 days, right? Just to give an example.
Yes,
and, usually if there's a rate cut, the prices adjust and then the banks are supposed to give back that portion of the loan because the loan to value ratio is not the same, right? Because that price has reduced, so the bank has to pay out, and if the price increases, you have to pay bank the extra kind of collateral. So I'm just trying to understand.
Yeah, I will be happy to explain, Ayush. See, when you are taking the gold on a loan from the bank, the dollar rate, the rupee dollar conversion rate, and the international gold rate, those remains, open. So with the increase in price or the decrease in price, you can always fix it, and that is the hedging way to do it. But when you are importing gold into the country and you are taking the gold from the bank, then the duty that of 15% that you are supposed to pay to the government during the time of import, that is something that you have to pay upfront during the time of taking the gold, even in a loan. So you are hedged against the international price movement, you are hedged against the rupee dollar movement, but you are not hedged against the duty cut or duty increase. I hope I could explain it.
Yeah, I did understand. Also,
so basically the 15% duty that was to be paid upfront for all the gold that we have taken on a loan for the last 6 months before the duty cut, that is where the impact is happening. That the duty, that 15% that you had paid is suddenly 6%. So that 9% difference between the duty paid and the current market rate, you are having to take a hit, and you will have to adjust that hit over a period of time.
Understood. Just one more question on mine. Could you just quantify what percentage is hedged via GML and what is hedged via MCX, just to give us an idea of the 90%?
Yeah, it is about, I think the 90% you could say 50-40.
Absolutely. This is almost 95% of our gold metal loan remains unfixed. So as Sir rightly said, you can say, I would say 45 and 45, which 45 and let's say 50. So 96% we have said. So almost, I would repeat that, almost 90 to 95% of our gold metal loan remains unfixed. That is hedged.
No, he's asking that what
out
is
of the total
gold metal loan and what is MCX.
Sir, almost
out of the total hedging.
Almost 50-45 or
55-45.
55-45. 55-40. Yeah.
All right. Thank you so much.
Get the answer.
Yeah, I'm done. Thank you so much.
Thank you. We have our next question from the line of Vidisha Seth from Ambit Capital. Please go ahead.
Yes, hi. Good morning. Thank you for the opportunity. So first question was on the demand trend. That while qualitatively you mentioned that footfalls have increased over the last 15 days, can you elaborate on the demand or sales trend in the second quarter till date, and what kind of growth have you seen? Is it in line with the 20% guidance that you have given?
So I could give you some, what I can tell you is that if we were growing at what you saw in Q1, the growth of 9 to 10% in retail, correct? That growth number, as on date, can be assumed to be at 18 to 20%. So that is how you have to look at it.
Which means, Vidisha, that we are growing around 25 to 30% YTD. Sorry, in the second quarter.
Till
date, as of now. So that it has given us around 18 to 20% YTD growth.
Understood.
And that's what we have said, that we are confident that we'll overall achieve 18 to 20% growth throughout the year, subject to quarterly variances.
Got it. Yeah. Second is just a follow-up to the earlier participant's question on OPEX. There is a 25 to 27% QOQ increase in other expenses. So can you elaborate or clarify on this, and is this a run rate to be expected going forward as well?
No, this is not the run rate going to be. One is that last year first quarter versus this year first, more stores came into picture, right? So there is a volume variance in terms of new stores rental. So let's say total 15 new stores. So first quarter was only 3 because with the IPO money we raised the store. So one is a volume variance, and one is that since the market was down in the second part of quarter one, we spent a little more money on the marketing, but this is not the run rate. So you don't multiply it by 4. So, what projections we have said